What's up, everyone? What's up? What's up? I hope everyone's having a great day. All right. Hope you guys had a great Easter if you celebrate Easter, and if you do, then happy Easter Monday. Right. So I have a question for you, and it's actually right there at the very bottom. Where should people invest their money? Where should people invest their money right now? And here's the reason that I'm asking that question. As you can see here, this happened actually a week ago, but as you can see here with the insider, it says a fixer-upper in DC received 76 cash offers and sold for $200,000 over the asking price. It shows how widely competitive buying a home is right now. Now here's the thing. This property is a fixer-upper, meaning that what's up, man? Meaning that it's in bad condition. It doesn't look nice, right? It's basically ugly. And I'm not sure if you guys can see the screen or not, but this is actually a smaller property for DC, but it's not a attached property. Anyway, here's the thing. Why would someone pay well over asking price? Why would someone pay $460,000 for a property that's technically outside of DC? This property isn't even in DC. This property is outside of the District of Columbia. And the only thing I could think of is that the investors, right, the 70 plus investors who had all these cash offers, they had no other option of where they wanted to place their money. They honestly thought that this was the best opportunity. And what that says to me is either someone is not looking or that people are choosing to be lazy. And I want to know in the comments, do you think that these 76 or 75 people who overbidded on this property, or were they lazy? Were they not looking for other opportunities, or is this truly just what our market is today? Because my opinion, from my vantage point, if you have investor capital, investor money, it's not in your best interest to overpay for an asset, right? For an investment, because what that means is that you can be over leveraged, you can have overexposure, you'll get less of a return for your clients, so forth and so forth. But what I'm seeing in the market is that's not the case. People are willing to overpay, right? And a lot of these investors are willing to overpay. Now, what's interesting is those who are fixer-uppers or fix and flippers, they're probably thinking, well, heck, if I go ahead and overpay now, and as long as I can get it back on the market while there's little to no supply, I can probably still get a higher sales price than what someone normally would. The caution that I'll give to anyone and everyone is, in the event that you go ahead and sell this particular property or any property, and it just so happens that in your luck that the market evens out, right, or quote unquote crashes, then you're stuck. And then you're going to be upside down. Then you're having to scramble and figure out what to do on a refinance, maybe rate and term or cash out to help your investors become more and more whole. All these are important things to think about before jumping right in. And as many of us know, when you're buying investments, especially, you want to be able to buy right. But if you're overpaying, there's no way that you can buy right. Okay. So as of right now, we have too many realtors and too little product, right? Too many realtors and too little homes that are on the market. And if the CDC and the government, et cetera, can continue to kick the can down the road, we're going to continue to have a shortage when it comes to supply. So the question really is, what do you do? Where should you put your capital? Where should you put your money? And what's happening is because there's less and less of a supply, that means it's higher and higher demand, higher and higher prices. There are some people who are then choosing to go over to things such as the stock market, different types of equities and things like that. But I think there's something people are missing out on. Right now, everyone here, if you wanted to, you could actually begin to look at purchasing established businesses, businesses that are owned and operated by baby boomers, businesses that are not on the cusp of utilizing technology. So just as an example, a great article that I saw today, if you can see the screen, is says ghost kitchens could be $1 trillion opportunity in the next decade. And so if you don't know, if you haven't read this article, a ghost kitchen is essentially a local kitchen that any chef or business owner can use. Now, in my local market, what I love about these kitchens per se is if you add the technology for people to order on an app, and you also go ahead and set up your shop, maybe 4 hours a day or whatever, and you get those online orders, you can have someone then go ahead and deliver the food. What's great about this is that this will eventually, I believe, this right here will put many restaurants out of business, because you're now able to have readily made food available, delivered to your home, much similar to like a Uber Eats or a GoPuff or anything else like that. But this is a designated area, designated operation, where their goal is to provide fresh food and they themselves deliver it. Okay. A great company that does this in my area is called Cluster Truck. You guys can definitely check it out. But I believe that that's going to be more of the future. So if you're not putting your money into real estate, there are two options that I would suggest. I would suggest that you go ahead and purchase equity in companies, not talking about stock, but equity as far as true ownership. Okay, something that's going to still give you a tax benefit by owning. And you're not going to get a tax benefit there. The second thing is, I would suggest that you hold your cash, hold your money. Don't get in any of these bidding wars. Hold your money for the market to have a turn, or if you're super eager, look up the markets that you love or you enjoy, and research when their tax sales are. Research when their sheriff sales are, and then go to those auctions and see if you're able to still get a deal. Now, I will tell you this. More than likely, larger markets like DC, like Charlotte, North Carolina, those are going to be markets where the prices are going to be too big, like legit. The prices are going to be way too high. Your returns are going to be super low, and it's not going to be worth it. But if you go ahead and look for what we call secondary markets or the tertiary markets, right? And you can still go and find amazing deals. Those are my suggestions. If you guys think there are other ways to get good passive income, please put them in the chat. I love to hear about it. And that is it for today. Talk to you guys soon. Peace.